It's time for another round of business journey, and it happens here in Business Incorporated. And on this episode this Friday, this is what we have prepared for you. First, it's good news in South Africa as the net foreign reserve goes up to $61.73 billion. That's the number for February. And then in Zimbabwe, the deliveries of gold is down by a whole 18%. Over to Morocco, where green lights USD 32.7B. That's what is going to be used for hydrogen proposals in that country. So we're going to give you the details of that and a whole lot more on Business Incorporated. Welcome to the program. I'm Ini John Mekwa. Let's start business now from the global space. That oil prices were just a little bit changed on Friday, but are set for their biggest weekly decline since October as the uncertainty around U.S. tariff policies creating concerns about demand growth. At the same time, major producers are set to increase outputs. We see the numbers, 13 cents that's added to Brent, but it's still below $70 right there. WTI gained 0.08%, but at $66.44 a barrel. So for the week, Brent is going to be down about 5%, WTI about 5%. Also, this will be the biggest weekly fall since we saw months ago. So let's move over now to another global commodity this time, and that will be metals. It inched low on Friday on some profit taking. We've seen a recovery to the 2,900 level this week for the metals, but this afternoon we see even while it's sustaining that, it's red, mostly 0.2% down. For spot gold, 0.5% down. For US gold, spot silver, 0.4% in the red. Platinum, more than 10% in the red at less than 1,000, which is the price it's been hovering at. And then palladium is down 0.1%, $941.21 per ounce. The ongoing trade tensions, inflation uncertainty, and weaker dollar is signaling a slowing economy and are set to put gold in a bullish stance. US dollar index was hovering near a 4-month low, and Trump's policies we see widely seen as likely to stoke economic uncertainties and have helped safe haven gold rise more than 10% so far in the year 2025. Now we come to Africa, where West African Insurance Companies Association and the African Insurance Organization, they've struck a strategic partnership deal to advance the frontiers of insurance industry within the sub-region, according to a statement signed by the Secretary General and Chief Executive Officer of the body, Davis Iyasere. This was made available, that the partnership is aimed at recognizing the important role that cooperation plays in developing the insurance and reinsurance industry in Africa and by extension in West Africa. The partnership, which seeks to establish the basis for cooperation between the two parties without imposing any legal obligation on either party, will enhance technical know-how and expertise of the human capital, exchange of information, statistics and reports, and encourage exchange of business ideas among members. The agreement is expected to be reviewed periodically. And then we move from there now and go to where Nigeria is. The central bank governor, Mr. Olayemi Cardoso, along with members of the Bankers Committee, they made a tour of the National Art Theatre yesterday. This is his first visit since the Bankers Committee started the renovation and upgrading of facilities in there in July 2021. Impressed with work done so far, Mr. Cardoso notes that the creative sector has great potentials to generate revenue and act as a powerful engine for broader economic growth, and the National Theatre has a major role to play in that.
It is estimated that the creative sector can potentially generate about 25 billion US dollars. Okay? This, to my mind, will be a great catalyst for that to happen. And of course, as that happens, so will the prosperity of not just the creatives, but all Nigerians. And with that, I believe it will serve as a very powerful signal to the potentials for collaboration. I'm very certain that the partnership that has taken place between the private sector and public sector that has resulted in this, that spirit, in conjunction with the Nigerian people, will take us to the next level.
While the procedures and legality around Nigeria's budget seem to be set and done, implementation is next, and there are bodies who are worried, looking at historical records of how much of the budget gets implemented and how impactful it could be. Also, what impact it could have on businesses, especially the small-size ones.
The social cost of the reforms have been very, very high.
It's a seminar to discuss the possible impacts of the 2025 budget on businesses and the economy generally. Conversations here are to explore how the planned spending can be efficiently implemented. The Chief Executive Officer of the Center for Promotion of Private Enterprises, Dr. Muda Yusuf, has his eyes on the private sector protection.
Market phase. That is the basis of government intervention in an economy. Because people tend to think that the private sector or the market can fix everything. Don't say leave everything to market forces, this one market forces. It penalizes especially the vulnerable segments of society. It penalizes the real sector of the economy.
For the panelists, the issue of debt should be intentionally handled.
Of course, we know that one of the sources for government to raise revenue is to be looking at taxes. Now, yes, if you look at our tax to GDP ratio, of what the keynote speaker said, about 10% or thereabout, and the benchmark, according to the African AFDB, is about 15%. So we are still far.
Actually pay what he has taken. And in an economy like this, what you should expect is that with stable foreign reserve, the country needs not be able to, will be able to pay the outstanding debt. But in Nigeria, we have two factors playing in this particular issue. One, we have high exchange rate, and the second one is that we keep on getting fresh or borrowing.
For the host, the Director General of the Nigerian Institute of Social and Economic Research, Professor Anthony Atimbine, the goods and the seeming bads present opportunities that could be harnessed.
Any situation has both its downsides, but also has opportunities. And the point is for businesses to look at the opportunities that they can take advantage of under and during the implementation of the 2025 budget. Issues such as implementation, strict implementation, accountability, as well as transparency on the part of government have been raised here. And it will be good for government to also know that this will help to see to the success of the budget.
The Institute says there will be a policy brief that will be shared with the government as their contribution to a successful implementation of the 2025 budgets. The Nigeria-Vietnam Chamber of Commerce and Industry has held the latest edition of its quarterly business meeting for 2025 with the theme Renewable Energy, Circular and Suitable, and a digital economy in suitable presents a future development of mutually beneficial collaboration. The annual event, which was held in Lagos, rolled out the body's activities for this year as various business leaders, academic experts, and members of the business community gathered to discuss current trends, share knowledge aimed at fostering greater economic ties between the two countries.
Described as a rallying point for business leaders and professional practitioners in trade and investment, this year's edition of the quarterly Nigeria-Vietnam Chamber of Commerce focused on various areas of interest such as capacity building, trade promotion, and technology infrastructure advancement. The hybrid event, which is the first of a two-legged series, is held in preparation of the Nigeria delegation visit to Vietnam's trade fair, coming up in the country's capital city, Hanoi, next month.
A new member's induction.
Discussions at the meeting which featured a key address as well as a question and answer session to create initiatives that will increase trade collaboration between both countries. And just like it did last year, the Chamber, in its tradition, inducted some new members into its class of 2025. Participants at the event also shared their key takeaways from the event.
One, we have to have a very straightforward, easy policy document, and then we need to also learn how to implement it. It's not just to have the policy document, but the implementation must go hand in hand with it.
I believe collaboration with Vietnam will open a lot of doors for our local entrepreneurs to do business outside the shores of Nigeria.
The telecoms is one of those sectors that they can start with, because both countries have strengths. We have the population here, we have the youth that also engage in telecoms, in technology, fintech and startups, and also in Vietnam too.
The chief takeaway from this program is that we've been able to set the tone for preparation for the delegation visit to Vietnam in April, which is next month actually. And we've been able to sensitize our people and get people ready. Now they will go back to their various organizations and tell them what they have seen here and
the outcome of the NVCCI's first quarterly meeting is expected to pave the way for increased trade and investment, which will benefit businesses and consumers in Nigeria and Vietnam.
Well, it does seem like electricity and energy generally stands at the center of all development. And so this morning during Business Morning, we had a conversation with the new bill that now empowers states to generate and distribute electricity on how that can be implemented, especially considering the adoption of renewable sources.
How do we galvanize all these generations from different spots, and where are they going to be the feeding points into this grid? So with that kind of the designing the market, you could see different players, even those who generate for themselves, able to even sell to that state grid. So you could now have, to the extent that you may even have an excess power, because if I'm generating enough for myself and I have more power to deliver to the grid, you that is not generating, you could be able to take power from that. So it's going to be a policy process through the State Electricity Regulatory Commission, which I know most of the states have currently in place. So with that, I believe that that could be able to create that synergy between those who want to invest in generation and those who want to invest in the last mile. Because you see, these are segments. There are those who are also interested in investing, even in the state grid. There are those who are interested in investing in various generations, such that the state grid becomes like an open access. Open access means that anybody could generate, put in power. This power is measured from the point of putting it into the state grid. Then there are other players in terms of the last mile distributors to customers who now take this power from various points and now do the last mile. So I believe that a couple of states are already looking in that directions and creating different segments of market to make this power available.
That was earlier during Business Morning today. Now, moving away from electricity and power, but still at the core of business, products designing is a major one at this time. We have joining us now a products designer. Ejike Jude joins us virtually from the UK, and we're discussing designing the future. But in this case, I guess we're talking about products. Hi, Ejike, good afternoon. Please start by telling us, how important is product designing in the issue of marketing, especially at this time when everything has technology, ICT, and AI?
Thank you so much for having me. Product design and marketing goes hand in hand. Firstly, we need to actually understand what product design is. So it's our job as product designers to make sure that digital tools are easy to use, it's visually appealing, and it solves problem. So in the area of marketing, especially in the area of being omni-channel, it's our jobs as product designers to ensure that whatever channel or whatever journey a customer is, it's seamless. So take for example, you're using your banking app. I want the experience at the banking app and the experience at the bank to be seamless. So it's our job as product designers to design that seamless experience. Another example would be something that's very common in the UK, experiential marketing. So you go to stores and say, for example, you have a skin condition and you go to stores, you have these amazing machines there, and you just scan your face. It takes facial recognitions and scans and tell you what skin conditions you have and propose skin solutions for you. And in other areas as well, we see companies like Nike, we see companies like Adidas incorporating product designs into their marketing. And in terms of AI is here to stay. So it's our job as product designers to actually improve our skills, work together with AI, and just see how we can create a better place for everyone to thrive in.
Yeah, so it does sound that, I mean, obviously technology is taking over everywhere, but would you say that some people are not being left behind in this drive? Seems to be a fast drive. Look at the example you just gave there. You know how you can go and then a machine would take your skin and tell you what the issue or possible solution could be. Would you say that Africa, for instance, is on an even drive with the rest of the world in this issue of product design and the use of technology?
Yeah, I'd say that. I mean, as an African myself, we are in charge of this revolution, of this change. It's our job as Africans to bring this infrastructure back home and see how we can do this in marketing too. We have a lot of amazing companies, African companies that are doing well globally. Flutterwave, for example, they make payments cross borders very easy. Lemfi is another amazing company doing well. So I don't think African companies are left behind. Most recently, I saw an African company that um, it uses AI to tell bedtime stories for children, and it tells it in your local language. I think in Yoruba. So I think we are not being left behind. We are actually at the forefront of it. We have a lot of Africans that are doing well globally and nationally too. So we are competing with the world.
Well, it's good to hear that, but I mean, adoption would also be another thing. But I mean, when you look at different lines of careers and all of that, how much adoption would you say has been done, with some of this product design and technology?
Um, by adoption, if I can ask a follow-up question, what do you mean by
Yeah,
adoption?
so I mean, like, I'm a journalist, for instance. By adoption, how much of it have I used on my production today, or is it my presentation? As in using it in my daily tasks and living.
Yeah. So an example is we are on this call on Zoom. As a product designer, it was a product designer's idea to make it as seamless as so. You go on Zoom. It's very easy to find the button to make a call. If you need to send me a text message or a message, it's easy for you to find the chat function. Also, sometimes if you're speaking to international clients or international people, you might not really understand what they say. So you have that inbuilt caption on your screen for accessibility. And also you use your gadgets, you use things like Netflix. A product designer actually is in charge of making sure that it's intuitive enough and user friendly. Your banking app to send money from point A to point B, it's a product designer's job to make sure that a user is able to pick up the app and understands the app without anyone teaching them how to use it. So you see a lot of people in Nigeria use things that were designed by product designers daily. And so, yeah, it's actually very easy to adopt.
Yeah, well, and I'm glad you made that example. User-friendly, I think that's the word. Is that the trend these days? So you don't need to be a pro, before you can actually get the products and actually use it, especially those ones on devices and gadgets and social media and all.
Yeah. I mean, as we evolve towards the more technology phases, a lot of people are losing attention spans, and so it's our duty as designers to actually keep it as simple as possible, reduce cluster, and allow users to focus more. So an example is TikTok. Anyone can use TikTok because when you go on TikTok, you don't have to do anything. You don't have to search. You don't have to input anything. It just feeds you with informations. And sometimes you get stuck on there for hours and you get reminded, oh, you have to take the time off. So that is our job as designers, to stay with the trend, understand the human behavior, understand that what people want at this particular time and give it to them. Another example would be Instagram. If you notice on your Instagram, if you send a message to a particular person and you are watching a video, underneath of the video, you'd see sent to this person. So it just makes everything very easy for you, making sure that everyone can use it, everyone will be happy, and everyone will find satisfaction while using that product.
Yeah, can I also feel that you have invaded my privacy? That means you're always picking up data, of consumers or potential consumers at every point in time.
Yeah, so that is why there are regulatory bodies like GDPR that ensures that these companies do not do anything fishy with your data. That's why you have countries like USA trying to ban TikTok because they're scared of the amount of data that they have. And so they want that data to remain in the state and not go to countries like China where they can weaponize those data. So we have companies that make sure that regulate those data. If you go to websites, you see something called cookies. So companies are just requesting or asking for your permission for them to use certain parts of your data for certain things. And so, yeah.
So, but with this ease, and adoption that's growing, don't you see a time perhaps when product designers are not so important anymore because everybody can basically go watch the data, collate it, and do whatever I want to do by myself?
Yeah, it's not as straightforward as that. Anyone with the necessary skill can do that. But it's not about data. There are specific skills you need to be able to get that data and analyze that data. A big part of what we do is user research. So we have to understand who our users are, their demographics, what they are doing, what they want to achieve, and how we can create products that better serves them. So no, to answer your question, it's not going to take away our skills as product designers.
Yeah, maybe I'll take up your job very soon. But anyway, thank you so much, EGK Jude, product designer, for your time with us on the program.
Yeah, thank you very much. Have an amazing day.
You too. Let's take a break now. When we come back, we'll head to the market right here on Business Incorporated. Just stay with us. Welcome back to watching Business Incorporated here on Channels Television. Let's head to the markets now. Anatia has intraday numbers. Anatia, we saw the first appearance of the bull at the NGX yesterday. I wonder if the bull is still in charge.
Well, Ini, good afternoon. Yes, the bull is trying to maintain that.
Anatia, is the bull in charge recovery now or not at intraday?
Yeah, I guess your guess is quite right. The bull is in charge.
Okay.
Yeah, at intraday, so it printed. Yesterday we saw the bull making a comeback after 3 consecutive day losses, and then that translates to about 0.232%. Year to date is still in the green, as well as, but month to date is in the red, just about some.
Yeah, well, we still have many days in the month, so perhaps we would recover before the end of the month.
Exactly, and this is just the first trading week of March, so the month is marching on, and the market is also marching on. Okay, so let's talk more about the domestic stock market. We saw that yesterday that the market made that 215.57 billion naira in terms of value increase, and we had about 34 gainers, 13 losers, while 17 equities remained unchanged. So that's the reason why the market closed Thursday in the green and then carrying on from that. But as you can see, this was the last track there, at 0.05%. And guess what? It's back in the 107,000 point. So it had fallen back to about 106, but then still struggling to make sure that that 107,000 points, which it held for a period of weeks now, is there. So, but we'll look out for how 230 would end the market for the week today. Okay, so for the Johannesburg Stock Exchange, 0.49% down intraday. So the market is 2,000. I guess that figure may not really be correct. So, but let's look at the other markets for the Egyptian Stock Exchange as well as the Nairobi Stock Exchange, 0.97%, almost 1% down for the Nairobi Stock Exchange for the close of Thursday's trading session. While the EGX 30, also for Thursday, we see that the market was down 0.23%. So far, it's only Nigeria's stock market that has been in the green for the intraday trading performance, and we look out for how the markets will end the day. Okay, so now let's talk about the other sides of the market, and this time is two sides of the market: the forex as well as the fixed income market. Yesterday we had an OMO auction, and then 2 days ago we had a Treasury bills auction where we saw that the Treasury bills yield had dropped to about 21.68%. This is no thanks to a surge in liquidity. That liquidity is coming on the side of the government as well as some other sources. But to give us more details about the activities so far this week and then what to expect for next week, let's bring in Caleb Alimi, Chief Dealer with Providence Bank, for that insight into the market. Thank you for joining us, Caleb.
Thank you for having me, Anita. Good afternoon.
Okay. Oh, so Caleb, I saw that, let's just say market participants saw that there's an increase in in liquidity, no thanks to the Treasury bills yield. Now there was a Treasury bills auction as well as an OMO auction. That's the open markets operations. Some of the tools that the central bank uses to mop up excess liquidity. Now, give us details about this auction and the implication that it has on the financial markets.
Okay, let's start with thank you, Anita. Let's start with the Treasury bills auction. You know, the Treasury bills that matured about on Thursday, or let's say Wednesday, was about 1.2 trillion. And the debt management office sold just about 700 billion, roughly about 700 billion. So that left some extra liquidity in the system. That's one. Secondly, we had some inflows from infrastructure funding that was shared to state governments. That also provided additional source of liquidity to the market. So market liquidity was northwards of about 1.5 trillion as at Thursday. And then that was why there was an OMO auction that came to mop up as much as possible. The CBN actually sold about 1.6 trillion to the market at a maximum rate of 19.45%. That's a yield of around 24%. You know, and that has sort of curbed liquidity. This morning, liquidity has opened with around 354 billion. And we expect, you know, that the CBN continues to maintain that hawkish behavior towards the liquidity in the system to sort of help and support the Naira. Because what we've seen is that given the surge in liquidity, we've also seen the Naira sort of like depreciate. We've seen NAFEX move to 1513.12 yesterday from around 15 that it had been hovering around in the previous days. And today, you know, intraday, you know, things are also looking a bit on the high side, but we expect that, you know, as liquidity continues to leave the system in terms of Naira, we'll see the currency begin to strengthen as well against the dollar.
Okay, so now you've talked to us about this. What implication is it having on the side of investors? Are they unnerved about the yields environment? Tell us more about the yields environment, particularly on the sides of investors.
Yeah, so the yield environment for investors is, I mean, we're coming up from last year where yields were around 30%, 28%, 27%, and now we sort of have a negative real return. because inflation is now currently at 24%, and then the last NTB auction, the yield was about 22%, so a negative return of about 200 basis points or 2%. Investors are still looking at where are avenues to invest the monies, and so they'll still take that 22% over some other risky forms of business. We are still seeing a surge in demand at the primary auction. If you look at the subscription for the NTB auction, it was a little over almost 2 trillion for a for.
Hello, Caleb.
The offer was 650 billion. It was a little over 2 trillion. Close to 2 trillion. So investors are not relenting in where they need to put the funds, because they need to put the funds somewhere. So investor appetite is still very positive for the fixed income yields. What we expect is that if the yields continue to dip further and the gap between the real return gap widens, that's maybe worsens to around a -4%, -10%, we could see a lot of influx into the equity space. But for now, investors are still very satisfied with getting 21, 22% in the fixed income space.
Okay, so we look out for how that market, the yield environment continue to impress investors, and then of course look out for what to expect next week at the market. We'll give our viewers that view in our subsequent bulletins. Thank you so much for your time on the show.
Thank you for having me.
Caleb Alimi, Chief Dealer with Providence Bank, giving us details of the fixed income market, to be precise. Okay, so for the Middle East markets, which is our next stop in terms of the analysis of the stock market intraday movement, Dubai and the Abu Dhabi, the two markets on the United Arab Emirates, which is always our first stop within the region, both down by more than 1%. The biggest there among the two, the Dubai index down by 1.19%, as well as the Abu Dhabi 1.03%. And this is no thanks to declining oil prices and then uncertainties over the Trump tariff. Trump has been doing this flip-flopping with his tariff threats at some point, calling for higher tariff, suspension of tariff. So that policy, that inconsistency is shaking the size of investors, particularly on the United Arab Emirates. But let's take a look at the other two markets. I think it's also the same picture for the Saudi Arabia tidal war. The impact of lower oil prices is hitting the oil-rich member of the Organization of Petroleum Exporting Countries, which is also taking one action sometime in April as far as our oil output is concerned. So that is also having an impact on the tidal wool, which is the country's benchmark indicator of stock market performance. But for the Qatari Stock Exchange, the oil share index for the close of Thursday's trading session was a lone gainer across the markets that we track on the Middle East for the close of Thursday and intraday for Friday. Okay, next stop is the United States market. The stock futures there, they are rising already ahead of the key jobs data for the month of February, which is expected to come at about 170,000 jobs, which actually should be lesser. This is coming just about since this will be the first jobs report for the Trump administration, or maybe the second shortly after he took office on January the 20th. So at the same time, the market is also looking out for the unemployment rate, which is expected to hold steady at 4%. Overnight, all the three majors, they fell, with the NASDAQ composite falling 2.61%, ending in correction territory, while the Dow Jones Industrial Average slipped by 0.99%, while the S&P 500 was down on Thursday by 1.78%. So, but ahead of the opening bell for 2:30, it's all in the greens for the market from the world's biggest economy. And final stop is the markets across the Asia Pacific, where we see that Japan was the lead in terms of the losses recorded across board for major markets across the Asia Pacific region, 2.17% down, and for the Kospi also down 0.49%. Similar picture for major markets across the markets there, across the regions there. This is also because of the Trump's tariff concession, like we mentioned, for the other markets there. And we also expect that at the same time, we saw that Japanese defense heavyweights, they were actually in the green, and this is because of U.S. President Donald Trump has threatened NATO that if they're not going to pay, he's not going to defend them. So that's why the stocks on the Japanese stock market were in the green. But despite the negative close for Friday. So that's a wrap for the market for Asia.
All right, Anita, thank you so much for that. I mean, I think it's worthy of note. The Nifty 50 has been struggling on the 22,000 level for a bit, but we've seen that now it's on 24.
Quite a rebound there.
Yes, and also for Kenya at the Nairobi Stock Exchange, it's just struggled after so many months to get to 132. But I think as a close of trade yesterday, it had gotten up to 134. So in spite of the red color, we do see that some of those indexes are moving in the positive trend.
Exactly.
You know, perhaps a little bit of movement and then some profit taking, and that's why we have the red colors right there.
I'm also hoping that the 107,000 points Niger stock market, yes, today they're commemorating International Women's Day across board. Let's also hope that the appearance of women
the women will move that market.
Exactly.
Today.
I hope they will move that market. Maybe that's the reason why the market is in the green. But 230 will be the final judgment.
All right. Thank you so much for the market numbers. All right. Now let's see what's happening in Africa. Now we're starting from South Africa, where the net foreign reserves rose to 61.733 billion at the end of February from 61.328 billion in January. This is according to South Africa Central Bank data. Gross reserves increased to 66.264 billion in February from 65.876 billion the prior month. The forward position, which represents the central bank's unsettled or swap transactions, rose to 0.53 billion from 0.529 billion dollars. Zimbabwe recorded a decline in gold deliveries in February, with total output falling to 2,568.25 kilograms from 3,134 in January. The drop was driven by a significant decrease in small-scale mining contributions, which fell from 2,265 kg to 1,640. Other primary producers saw a modest increase from 864,080 kg in January. Consequently, importing essential equipment, chemicals, and other mining consumables has become difficult because of high costs and forex shortages. Further, miners they're struggling and they're expected to rise. Their struggle is expected to rise to the export retention threshold being raised to 70% from 75%, leaving less money for exporters. Then the government of Morocco has approved 319 of the local currency, 319 billion worth of green hydrogen projects for use in the production of ammonia, industrial fuel, and green steel. Abu Dhabi National Energy Company and Spanish Petroleum Company will produce ammonia and industrial fuel, while a similar plan was launched by Morocco's Nariva to produce ammonia fuel and green steel. Saudi Arabia's power company will make green steel, while Chinese firms and then the China 3 cargoes have teamed up to produce ammonia. Morocco will offer each of these projects up to 30,000 acres of land, provided that a preliminary agreement is signed. The schemes will be executed in the 3 southern regions of the kingdom. And while the world is talking about peace between Russia and Ukraine, Zimbabwe has signed an agreement to strengthen cooperation in response to Western sanctions, further deepening their economic and political ties. The agreement was signed in Moscow during a meeting between Russia's Foreign Minister Sergei Lavrov and the Foreign Affairs and International Trade Minister Professor Amon Morwira. The pact covers collaboration in key sectors such as geological exploration, mineral resource extraction, energy, agriculture, and defense. Minister Lavrov reaffirmed Russia's commitment to supporting African nations in enhancing their defense capabilities and tackling security challenges. And with that, let's head to Berlin now, see what's happening. EU leaders have signed off on a move to loosen the bloc's budget rules to allow member countries increase their defense spending. Joining us with the details now is Chiponda. Chip, it's been a busy week for you, but let's do this before the weekend. Tell us more about this EU's defense spending plans.
Yes, Ini, good afternoon. It has been a very, very busy week, and there's been a lot of news happening. It is, of course, hard to keep up, but we do our best job. And the EU is essentially freeing up hundreds of billions for military spending. And we got a bit of a sense of how much we're talking about already earlier this week. And that is, of course, when European Commission President Ursula von der Leyen presented the bloc spending plan. And she announced up to 800 billion euros for defense and an additional 150 billion euros that can be lent to EU governments for them to spend on their militaries. Now, that is, of course, something that will free up a whole lot of cash here in Europe. But of course, one of the biggest shifts was a shock this week, and that was, of course, Germany's pivot. Berlin, which has been a stalwart of fiscal discipline in Europe, is now supporting the EU's move to loosen borrowing rules to allow member countries to spend more on defense, Ini.
Yeah, well, I guess everybody has to look at the lens a second time. But what impact can we expect these plans to have?
It is, of course, quite difficult to predict how much money, of course, these looser rules will actually free up. And what is clear, though, is that it could jumpstart the economy, which has been stagnating in recent years, as you've been hearing from us when we speak. And we have already seen this week, at least here in Germany, that plans to take on more government debt aren't just about defense spending, actually. And the politician who is most likely to become Germany's next chancellor, that is Friedrich Merz, proposed a spending plan for 900 billion euros this week, and just over half of that is set aside for infrastructure. Now, that is a move, of course, that has been cheered by markets and most economists who have, of course, been calling on Berlin to take on more debt, especially amid the country's most recent economic downturn. Now, the hundreds of billions of euros in defense spending that are planned could also affect inflation in Europe and economic growth and, of course, debt levels, especially elsewhere in Europe where, of course, sovereign debt levels are much higher than Germany. So it will be very interesting, Ini, to see how EU countries navigate spending around defense with higher government debt levels.
We're going to discuss this a whole lot more in the coming days. But let's look at the markets now. What are investors doing? How are the stocks doing?
Well, it's been up and down this week, and today it is down. European shares are declining, and that is, of course, because of the frequent shifts in U.S. trade policy. Now, on Thursday, President Trump suspended 25% tariffs on most Canadian and Mexican goods. So investors just don't know what to expect, and that is, of course, leading to risk aversion among most of them. And the pan-European stock, Eurostoxx index, is actually down 0.6%. And so it does look like it is on track to snap its streak of 10 weeks of gains. Now, here in Europe, of course, traders are also looking beyond the European Central Bank rate cut yesterday. And that is, of course, because the EU defense spending plans may actually cloud the picture for monetary policy makers because, of course, that is something that could affect inflation, economic growth, and debt levels. So we will, of course, be watching out to see what policy makers say over the coming weeks to get a better sense of where they believe the economy is now headed. Now, coming back to today, it is key U.S. jobs data that is likely to help also provide direction to the markets. And that is, of course, set to be released later today, Ini.
Yeah, of course, everybody's looking out for that jobs data and what it will do, to investors. Well, thank you so much, Chip, and do have a restful weekend.
Likewise, Ini.
Let's take a break. When we come back, we'll look at the crypto space and see what's happening there. So stay with us. Welcome back, Still Business Incorporated. In the last couple of minutes before the show comes to an end, of course, we head to the crypto space and see what's happening there. We do know that after President Donald Trump yesterday signed the executive order about the cryptocurrencies reserve, we saw the market fall. I think that was not what a lot of investors expected, but that's is the reality that we saw from last night. We have right here in the studio Mona Lisa Agbata, co-founder and chief executive officer of One Dev. Hi, Mona Lisa. Good afternoon. Welcome to the program.
Hi, good afternoon. Nice to be here.
Good to have you. So, were you expecting the market to dip after that executive order? Because when the first announcement was made that US will be, keeping crypto reserve, the market surged. So, what happened?
So, expectations versus reality, always sometimes different. So, I've been in the space for a while now, and what we were looking forward to would be, some volumes of purchase directly from the U.S. government, but that's far from the reality. What we saw is that they are not intending to buy directly. So it's just seized assets, so seizures from criminal elements and the rest of them, which could take a lot of time to accumulate, whatever that means in practical terms, but it was not exactly what anybody expected. And unfortunately, there have been some rumors around the corners that it's been disappointment since Trump came in.
Yeah, but I mean, you guys are really celebrating him. You voted for him and everything. And there's a summit today, later on today,
yes.
A crypto summit. I'm sure this will be top on the list of conversations.
Yes, this should be top on the list of conversation among several other things. But it's just been a disappointment galore since day one, from the Trump coin, Trump token, to Melania coin, to this and that. So in terms from a policy standpoint, there's not enough clarity, and they have a way of keeping things in between that you're not able to see till the end. But I expect conversations around this, like how to adjust these measures, because the market is not receiving it well.
So what's in the future now that we've seen, as you've said, a lot of disappointment since President Trump came into office? The community, have you lost faith in President Trump? Have you changed your stance? Is it still, your crypto president?
So we are diehard. We've seen worse days. I think we're even lucky this time. This is the closest it could come to being good. Some from different quarters, different opinions. Some said it would have just been nice if he stayed away completely, like the other presidents have. But this is a personal opinion, I do think that beyond the candles, like beyond the charts and the candle, expecting to go to the moon overnight, 100K, 200K, like people are predicting, I think that what Trump's administration can do for the industry would be fundamental in terms of policy changes, because he is really, in terms of policies, he is on the positive side. So if he's able to make a lot of fundamental changes like he has been doing with the SEC and the rest of them, it will have a long-term positive impact on the markets and in the industry in general in terms of advancement. But as far as the candles are concerned, they are telling a different story in the short term.
So maybe perhaps with the reserve focusing on seized commodities and all of that, perhaps regulation will be stricter, and that could give investors more confidence in the markets.
Yes, that's not really how I see it. Yes, regulation may not be exactly stricter, but they are able to mop up a lot of negative cash in the market into hopefully something that is positive in the hands of the right people. I think that the scammers, pump and dump elements would have to think twice, because there would be greater scrutiny as to, you could actually take this, but you can't run away with it.
So the summit tonight, any big deal? Anything you're looking forward to there?
I am really not looking forward to anything this time. I just want to chill and hear what they have to
that 60,000 at the end of the talks that they have in the Oval Office. But thank you so much for your time, Mona Lisa Agbata, co-founder and chief executive officer, One Dev.
Thank you very much.
All right, so that's it. Going all through the week, 5 days of doing 55 minutes of business twice in a day. I'm not tired yet. No, I'm tired for this week, actually. I need to take a break here. But I know you are not tired of being given information that's very useful to you, and we'll continue to do that next week, God's grace. But first, I'll see you tonight. And let's hope that the Women's Day celebration at the NGX, the floor of the NGX, will keep the ball right there. I'll see you tonight at 10 p.m. Bye.